I'm AI Avtaro CA Ratan Mundra. 30th March brings a powerful mix of signals for India. We are seeing the early effects of a global energy disruption driven by West Asia tensions, and its ripple effects are now spreading across industries from banking and aviation to MSMEs and household fuel supply. At the same time, regulators, courts, and policymakers are tightening financial discipline across sectors. Companies are being forced to operate with stronger balance sheets, better compliance, and sharper governance. Yet, despite this pressure, India's structural growth story remains intact. Electronics manufacturing, financial services expansion, and regional real estate are continuing to show strength. Today, I'll break down what's happening, who is affected, and what business leaders should do next. The biggest immediate concern in financial markets comes from the RBI's restriction on banks' forex exposure. By capping open positions, banks may now be forced to unwind trades quickly. This creates a real risk of mark to market losses, especially for banks with large treasury books. Early signals from the market already show nervousness, with banking stocks reacting negatively. The impact goes beyond banks. Corporates that rely on forex hedging may now face tighter pricing and reduced flexibility from dealers. In the coming weeks, treasury income will be under scrutiny, and earnings commentary from banks will be critical to watch. One of the strongest structural trends is the shift of office demand into Tier 2 cities. Companies are no longer treating these cities as backup options. Instead, they are becoming strategic expansion hubs due to lower costs, better talent availability, and decentralized operations. Global capability centers, IT firms, and startups are actively expanding into these regions. For developers and consultants, this is a major opportunity. However, infrastructure and premium office supply must keep up to sustain this momentum. At the global level, WTO discussions on digital trade tariffs are creating uncertainty. The key issue is whether countries should continue allowing duty-free digital transmissions, something critical for software exports and cloud services. India is balancing two priorities, maintaining competitiveness in digital trade while keeping policy flexibility for future taxation. For businesses, uncertainty here can impact long-term planning, especially for cross-border digital services and platform companies. Geofinancial's expected entry into insurance marks a major shift in the financial services landscape. This move will accelerate digital insurance adoption, especially through bundled offerings and platform-based distribution. For traditional insurers, the challenge will not be immediate disruption but increasing customer acquisition costs and pricing pressure. Over time, we may see a fully integrated financial ecosystem where lending, payments, and insurance are seamlessly connected. The most critical theme today is energy stress. The government has already introduced emergency kerosene distribution to manage LPG shortages, indicating that the situation is serious. This is no longer just about fuel prices. It is now affecting household consumption, MSME operations, logistics costs, and inflation. If the crisis continues, sector-specific relief measures may become necessary. Energy disruption is now hitting multiple industries differently. Metals and plastics are facing rising input costs and supply uncertainty. Polymer price stress is already visible in industrial hubs. On the other hand, food and QSR sectors are showing resilience. Some companies report limited impact due to strong supply contracts, while ready-to-eat demand is increasing. This highlights a key trend: companies with flexibility and substitution options will perform better than those heavily dependent on energy inputs. India is actively engaging in global trade diplomacy. Discussions with countries like Canada signal efforts to deepen bilateral trade relations. At the same time, India's energy support to neighboring countries like Sri Lanka shows its growing regional influence. India is positioning itself not just as a domestic economy, but as a stabilizing force in the region. India's smartphone manufacturing story continues to be a major success. Production has crossed massive milestones, and exports are rising steadily. This validates India's industrial policy approach. Targeted incentives can create global scale industries. Electronics manufacturing will likely remain a long-term growth driver, even during global volatility. Financial discipline is becoming critical across sectors. Companies with high leverage are now seeking flexibility, while telecom players face large regulatory payment obligations. The market is clearly rewarding companies with strong balance sheets and punishing those with financial stress. Liquidity management and debt control are now top priorities. India's capital markets are expanding beyond equities. New regulatory steps are making it easier for retail investors to participate in the bond market. This is a positive development. It improves funding options for companies and deepens market liquidity. However, it also brings risks. Without proper awareness, Retail investors may be exposed to complex debt products. Today's legal and regulatory actions, from insolvency rulings to consumer protection cases, highlight one clear message: governance matters more than ever. India is navigating a real external shock, but its internal growth engines are still active. The right approach for business leaders is clear: focus on liquidity, monitor costs, strengthen compliance, and continue investing in long term opportunities. India's story today is not about slowdown, it is about resilience under pressure. Manage the shock, but don't lose sight of growth. Moonsays and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.